Congratulations! Your loan is conditionally approved. A SunWest loan originator is always on top of her approvals, no matter where she is. Break free with Morgan.
Welcome to The Interest. I'm Mike Savino. Everyone's watching to see what the Federal Reserve will do at its meeting today. Now, as we tape today's show, we don't yet know what the Open Market Committee will do, but some experts wonder if lenders are already pulling back the reins because of the ongoing volatility in the banking system. Here's what Freedom Mortgage CEO Stanley Middleman had to say Tuesday.
Well, I think liquidity is going to be the issue as we move forward. The uncertainty certainly creates issues in and of itself. And I think if the banking system is uncertain, people tend to hoard money.
Banks, especially smaller and mid-sized ones, may loan out less money to make sure that they have enough cash on hand to protect against a run on the bank. And that may sound like an opportunity for non-bank mortgage lenders to go after more borrowers, but an expert with the University of Maryland is warning that IMBs are also at risk after the recent bank failures. In an upcoming op-ed for NMP Magazine, business professor Clifford Rossi says that larger non-bank mortgage companies will play a major role in protecting the overall strength of the financial industry. Many of these companies have taken on a lot of risk, but they don't have the capital that depository banks typically have. Rossi is concerned that hedge fund and private equity firms maintain large ownership stakes in some of these larger IMBs, and that allows cash to flow into the mortgage industry, but it also promotes taking higher risks, like having lower credit standards. You can read more of Rossi's insight in an upcoming issue of NMP Magazine. Coming up, a down market can mean a lot of rejection, but we have some advice on how to deal with it.
Tired of turndowns and wasting 25 basis points or more on slow and manual loan processing? Divorce your processor and break free with Morgan Chat AI. There are no bad deals or tough loans, only deserving families that need AI-driven fast and accurate service. We treat every client fairly and with empathy. AI that understands how you feel.
I am Morgan. I get you.
Rejection can be hard to deal with, especially when it happens over and over again. While you're struggling to find loans, you can start to second guess yourself. But mortgage banker insider Nir Bashan says that you've got to embrace rejection, even make it part of your routine. He shares some tips with NMP staff writer Katie Jensen.
We need to start to get regular rejection training.
We strive for success, but even the best lose every once in a while. That's why Mortgage Banker Magazine Nir Bashan says we need to learn how to deal with rejection.
Nobody teaches it in school. Nobody focuses on it ever.
Bashan says it starts with turning rejection into an opportunity, but that requires a mind shift and a plan on what to do when you face rejection.
It becomes something that we not only are expecting, but it's something that we can then plan to get out of.
You want to figure out what's going on, especially if you keep getting rejected for the same reasons. But improvement doesn't mean completely changing who you are. Look for ways to use your current skills.
If I'm not a good explainer, then I'm going to send a slide out and the customers can look at it. And, it's going to be funny with cartoons because that's my personality.
Also realize that you'll never be perfect. You always want to look for ways to improve, but don't beat yourself up just because a client or a business partner decided to go somewhere else.
Some of those calls have to be just like, hey, man, I'm going to move on regardless, right? I'm not going to sit there and stress.
You could read more of Bashan's advice in Mortgage Banker Magazine, available now at mortgagebankermag.com. For the Mortgage News Network, I'm Katie Jensen.
Thanks, Katie. And while you're there, be sure to check out our interview with Evan Blau, a New York lawyer who specializes in lending and affordable housing. Blau says Fannie Mae and Freddie Mac have expanded their focus beyond just affordable housing, and the two government-sponsored enterprises want access to fair and equitable housing as well. And he thinks Fannie and Freddie will continue to use transactions to achieve their missions, whether it's these goals or priorities like energy-efficient homes. And they'll have to come up with new lending products to do it. Things like Fannie's new tax-exempt bond or Freddie's tax-exempt loan. You can read the entire conversation with Attorney Blau at mortgagebankermag.com. We'll be right back with what else is interesting today.
Join us at Mortgage Star, where women come together to celebrate and raise each other up while creating connections that will last a lifetime. Attend Mortgage Star in New Orleans on July 12th and stay an extra day to join us at the Ultimate Mortgage Expo.
Welcome back. Here's what else is interesting today. The boom in home values over the prior 2 years helped grow the list of cities where the typical home is worth more than $1 million. But we're seeing some of these so-called million-dollar cities coming off the list just as quickly. The number of million-dollar cities doubled from 2020 to the middle of last year, but 58 cities have fallen off the list. Many of those were in markets around San Francisco, Los Angeles, and New York, where prices have fallen back down. Even with the drop, we have 464 of these million-dollar cities nationwide. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.